Hey folks, we'll get started in a few minutes. Just confirm you're hearing the sound well. Thank you. Awesome, thank you. We'll get started here in just a few minutes. No, I'm not talking. I'm just getting ready to go. I haven't started yet, folks. Give me another minute. Good morning, David. Nice. I put up the 5-minute AMC chart so you guys can watch this crazy thing trade. I'll be starting in just a minute. Just got one more thing I'm preparing. Hang on one sec. Welcome, everyone. It is a live stream Wednesday, and you weren't hearing me because the sound was off. I was just preparing, had to get the Runa ready, and it is time to roll. A couple of things I want to talk about today before we get going is, I guess not, I had AMC up there a minute. What a crazy market. And I remember telling you folks, AMC and GME, these trades were still on, and I saw one of the funniest things. Let me just go on this screen so you can see this thing. This is a 5-minute chart, and I will start with AMC. Somebody suggested that. I hadn't seen this thing moving today, but I remember a number of weeks ago talking about this, and I saw one of the stupidest things possibly, although there's been a lot of stupid things come out of Jim Cramer's mouth. This was certainly one. Just happened to run across one of those little clips on the CNBC app where he was telling everybody that nobody's going back to the theaters. Everybody bought nice equipment to hang out at their house, and they're all going to just stay home. They're not going to go to the theaters. Well, last weekend was a pretty good test, Memorial Day weekend, and, people went to the show in a big way. People want to be out. They want to go spend $8 for popcorn. They want to do that stuff and be social, and that's what humans do. It's part of our culture. But I think it's interesting what's going on here. Obviously, they just did an offering. There's a lot of stuff going on. These are the stocks that I put up a minute ago. I'll bring this up. And in fact, it'd probably be better if I bring it up in on our platform here, just so you can see exactly what's going on here, and then we'll move on, and I'll get on to the show. And let me just go here. So this is what I've got on the screen here right now. This is all the trades going back. If we go back to last year, you see this thing came on at around $12. We got a buy signal on this on our daily models. Of course, it's not at 35. We're now at 66. So it's doubled since then. And so we're up 106%. So I'll go through some more details on this thing, but it's in a runway type pattern. You can see there's no way to make an analysis of a stock like this. It's just spiking up. Chances are, if you did buy it at $12 and it's traded above 70, yeah, I would definitely take some off the table. We used to have a strategy that we talked a lot about back in the day, back in the option trading, floor option trading days, is like if you had an option that doubled, sell half, right? Play with the house money. And then you can do a lot of things. So you always want to trade in increments that you can sell half. And we used to always joke about tricking the market gods and making them think we got out when we really didn't get out. But anyway, that's a phenomenal story that's going on there. Markets like this are opening back up. The I think it's interesting. CDC through the C thing. I can't even say the word on this channel, but they're going to mandate vaccines to get on a cruise ship, which is interesting, right? So yeah, there's lots of crazy stuff if you folks are in New York that you already know about, going to sports and all kinds of things. It's basically pretty crazy to say the least. So anyway, so here's what I want to talk about today. There's a number of things going on in the markets. We continue to see, we get up and around this 4,200, 4,230 area, and this market just keeps getting rejected from here. So I'll go through all the details here in a minute, but we continue to see a grinding. I talked in last night's video just very briefly. It was like an 8-minute video. I got in, got out. I had a few things I want to say that I wanted to really unpack on a bigger level today. And I think what we're seeing from all of the craziness out there is that the administration, we're going to go here first. The administration, there was an announcement late last night that they're basically taking away all the oil leases in Alaska that Trump granted. I guess it's only the ones that Trump did. I don't know. I haven't had a chance to research it since then to see if it goes deeper than that. But basically what this Green administration, you can agree with it, not agree with it, what they're doing is they're doing their best to shut down the U.S. oil patch. You know, they're just trying to shut everything down. And I when I was on the way into the office this morning, I had an opportunity. I just happened to run into one of my neighbors, and we were chatting for a few minutes, and we were talking about this. Is if everything had to be run by electricity, could two things happen? Could we produce all the electricity that we needed to do that? Could we make enough batteries to do all that? And I had some other points here. Yeah, and you know, could we? And I'm sorry. Meanwhile, China has most of the, not all, but they have a lot of the rare earth, all this stuff. So at the moment, it looks like this is literally a great deal for China. But guess what? You can't do this stuff. So what they're going to do is they're actually penalizing this tax where we see gas go from basically under sub $2 to $4 almost. A lot of folks, you know, and that's a joke for you folks watching in Europe, I know. It's double that again plus. But what we're seeing here is they're just really taxing the people that can't afford to hardly buy gas. I was in California right before they locked everything down in February of 2020. I was at a conference in San Diego, and I remember buying gas, and it was, you know, $4 and something. I mean, it was unbelievable. And that was then. That was because of all the California taxes. But I'm going to get to the point here in a minute. Is I made a comment in last night's video, like, I don't know what's up with that. Well, I figured it out overnight. And what's up with this is they want to shut down all the oil that they can in this country, and so that they're trying to force all the green technology on every area they can. The problem is it's a giant bottleneck. You can't make enough of anything to actually achieve this stuff. We're seeing a number of cities actually trying to go against natural gas burning to heat your house, and natural gas is not that big of a contributor, not like gasoline engines and cars and all that. So this isn't supposed to be an environmental meeting, and it's certainly not my expertise, but just what I'm observing here. So I'm going to have a point for what we do here as far as talking about this stuff and what it means for investing here in just a minute. So bear with me. But as we watch all this, we have to figure out, as investors, where are we going to play at? Where's the money flow going to be? And this is just something I figured out literally in my car on the way over to the office this morning. I didn't figure it out. That I thought the synapse that fired is it looks like we need to look at these battery technologies. We need to look at solar panels. But guess what? Most of this stuff's being made in China. They can make a lot more of this stuff than we can. So there's more a benefit. So you have to just figure out if you want to play with the Chinese and play in these stocks. But I'm going to start doing some research. We talked a number of weeks ago about the infrastructure deal. Well, the infrastructure deal at the moment is actually a joke. I mean, it's like one of the most laughable things so far. They keep just upping the numbers. So wait 2 more weeks, we'll be at 8 trillion, 10 trillion that they want to spend. And I saw a comment on the YouTube channel that somebody made a comment that on one of these rants I go into on the live stream that I talked about them getting up to 6 trillion and they're there. But it's talk. There's nothing being implemented. They're going to have a hard time getting this done. Even if they go it alone and they don't look to the other side of the aisle to get approval on these things, it's still going to be pushing on a rope to a large degree, and it's going to be hard to get a lot of these programs out there. That's all there is to it. There's no way around this, and we just have to watch it unfold. So what I'm looking for is some type of theme that we can play into that we can make some money on. I'm usually really good at this stuff. I'm going to figure it out. I don't have necessarily an answer, but I get a lot of the feedback that I get from you folks is really helpful in maybe triggering some things. I've gotten some seen some really good comments that you folks out there. I have, let's say I have some business friends from the institutional side, and we had a conference call last Friday. Every Friday there's 4 firms that I get together with, and we chat about what's going on in our space and all those type of things. And it's interesting because the institutional guys think a lot of you retail guys are dumb and don't know what you're talking about. And I'm trying to tell them my involvement in the last year with the retail side is just the opposite of that. In fact, not only are you folks a lot smarter than all these, we'll just say, so-called professionals think you are, and that continues to get proved maybe by the AMC. I've got it on the other screen here, and those type of things. But what I have found is that the retail community is willing to do a lot of work that I actually see the institutional side. And when I talk about institutions, a lot of the people that have been my customers over the years are individual investment advisors. Very, from an investment viewpoint, very few of them have a high level understanding of what's going on the markets. A lot of these folks, if they don't use our software that are out there, are just using pie charts, doing allocation strategies, and worshiping the market god and hope they don't die. That's pretty much what goes on. From the standpoint of looking at this stuff, I really think, I said this a number of weeks ago, that I don't think the oil trade's over. So there is a play in oil. We see, I just noticed, crude oil's pushing well over $68. I'm going to go through crude today. That's kind of a theme that came up for me last night. And the results of all this, and from my opinion, is there's going to be a further play here, and there might be a secondary play on maybe some of the batteries and stuff like that. So be thinking about this as we go through the live stream today. When it comes time to look at stocks, let's put a theme. I like to, rather than looking at Apple and Tesla and all the usual stuff, let's think about some of these things, whether it's rare earths or mining or electric, whatever might be out there, batteries, all that stuff. I think that's where there's going to be a play, and I'm trying to figure that out. And as a community, I think we can figure out quite a bit just by communicating. And I just want to tell you folks, if you haven't done it, make sure you go to kendallreport.com and just give us your name and email address. There's some announcements coming up. There's some things coming out that I've been working really hard in the background on TradingView. There's some really cool stuff about to happen. So make sure you sign up there. That's how you're going to find out about it. I'm not going to do advertisements other than telling you to do that on this channel right now. That's not what the purpose is here. But just kind of going down this trail just a bit more, is I think there will be a major play. And one of the things I'll be watching, when I go through crude oil, I'll talk about this more, is one of the things I'm watching around the $75, $80 level on crude. If we start to sustain prices above that, then what we're likely to get then is going to be more inflation. And then that should start to reflect in interest rates and the dollar and gold and some other places. So there's a tight mesh between what's going on with crude oil right now and what's going to be going on with all these other items that I'm tying together here. So I'm trying to come up with a theme. For instance, last year when Warren Buffett sold all the airlines, that was a great trade. That's still a great trade. I could bring some of those portfolios up that I built live on this channel right in front of you guys. And they've done well. I mean, they're up 150% in the last year just by trading 9 airlines, including Boeing's in there as well. And we're long all this stuff right now, and the airlines are coming back on. TSA saw some of the biggest numbers. I think close to 2 million went through TSA the other day, only report I saw. But the point of all of this, what I'm talking about today, is I believe oil is going to be a big driver. I said this has kind of been a theme for a couple of weeks now, that we're likely to see this crude and this oil trade continue. This oil sector trade is going to continue. So we're going to start to look at things. So if they do continue to shut down let's say they shut down the wells, they shut down everything, there's still maybe the refiners are a play. Well, that's just a lot of stuff to research into there, and that's what I'm going to be spending some time. So by the time we get here this time next week, then we'll be able to do this. This week's flying by already because it's Wednesday already, but we just started the week, right? Just looking at my notes here. Yeah, so just to summarize, I think it's going to be hard to convert the world to electricity. I'm not even sure it's a good idea. There's so many things that will need fossil fuels to run, big equipment. There's lots of things. I mean, you're not going to see electric trains anytime soon, right? So there's a lot of things, large machinery, other things that are going to have to be used. So even to build the green stuff, you're going to have to burn a lot of fossil fuels. So it's kind of, yeah. I don't know how long it take this transition. It's 20, 30 years. I'll be gone by then, I'm sure. And I don't know what that transition is going to be, but it's a very long one. So, what we have to figure out, I think, in this case right now, and I told you folks back in November, the easy money's gone. Jay and I were talking about this before the show this morning, and it's a lot harder. Last year, money was easy. You could run our daily models, and we had a bunch of strategies that were up 150, 200% last year just by putting some stocks in our models and following them, right? That's not happening anymore. We don't have that kind of market, but there are spots that we find, and that's why I go through this long viewing there. So I don't think I was boasting. Was I boasting, Mike? I don't know. I was discussing what the current is. I'll show you the models, okay? So it depends on what it is. So like, for instance, there's a rotation going on in the markets, right now, and that's what I was talking about. And we're going to go through that as well. So one last theme, and then we'll get going. We've got a few hundred people here, so that's good. So the other theme that I will talk about in detail today is this rotation. We'll see if we can continue to get any kind of traction. Russell's down a little bit. NASDAQ, this whole rotation back to the small caps. And last night in in the breakdown on the video, we had 3,800 new buys. So, I always like guys like Mike, right? He thinks that because I said something last week that he was boasting. Well, if you watch the channel every day, you've seen we went from 40% long to 62% long. So it's dynamic. So it's not any static. And I was talking what I do, and I'm data driven. Everything that comes out of our systems, that's what I talk about every night. And as I tell you folks all the time, these videos end up being interesting, but all of this stuff is for context for people using our platforms, our institutional accounts, people like that, having things to talk to their clients about and things that are likely to be helpful in moving things forward from that standpoint. So that's really what I'm doing here. Okay, so I appreciate the comment. Yeah, well, it's okay. I think Mike Workless is, he can be a troll. It's all right. You know, um, yeah. So Mike doesn't use the software. He doesn't know what he's talking about. So it's okay. Have a nice day, Mike. Yeah. So everything's very dynamic, and we watch 16,000 symbols. How many guys on the internet do you know that does that and can actually talk to you about all that? Probably just me. I don't know of anyone else. Everybody talks about indices and what they think they're going, and they draw a bunch of amateur trend lines on charts, and that's how they make their analysis. They talk about wedges and head and shoulders and all that kind of stuff. So it's somewhat funny. We're actually in the money management business from that standpoint, and actually run billions of dollars, Mike. So, and I'm sure some of our clients are on right now. So it's greatly appreciated. So we took care of the troll. We got to do that once in a while. They get acknowledgement, and trolls are good, by the way. I love them. They actually bring out a lot of good stuff sometimes. So okay, so let's do one final thing, and then we're on to the charts, and we'll dig into a lot of stuff. But just make sure that when you're thinking about stocks that you want me to look at, we'll get to that sometime in the final 45 minutes or so of the stream. We'll go ahead and get into that. But the realities are, I want to stick to kind of that oil, rare earths, mining, something in that context of my little rant I just went on for about 20 minutes or so. So that's basically where my head's at. We, like I mentioned, just to close out, we talked about the infrastructure deal. It was a great idea, but there's no infrastructure. I actually have, some of you would hate it. I built back when there was a guy named Donald Trump was president. I built a mega strategy number of years ago. So it was all when they were talking about infrastructure, right? Well, I just happened to look at that strategy the other day. Things up 40% this year. So, so some of these stocks are not the Biden green stocks. They're still some of the other stocks that are still in play that look like they're making some good money. So I'll just base that based on performance. And I was telling Jay, I've got 3 ETFs in an oil strategy, and it's up over 40% this year. So life doesn't have to be complicated to make money. Bear with me 1 second here. Sorry about that. It always seems like when I get online, my allergies kick in. So hopefully I'll be better off here. Okay, so let's go ahead and dig into these charts. Let's start. I'm going to go through the usual stuff. My plan is to go through the indexes, and then ultimately we'll go through the dollar and interest rates, and I'm going to do quite a bit on the on crude oil as well. Hey, Mike, why don't you go somewhere else? All right. Matter of fact, I'm going to make you go somewhere else. You can watch, but you don't get to play. So bear with me 1 second. I just don't want. Listen, I don't care about Mike's opinion. I just don't want him distracting the rest of us, even giving him any more attention. So he's gone. So okay, so let's. The final thing that I want to point out is, I guess, this whole inflation thing that we continue to go, and I think we're at a stalemate. And I'm going to go through this whole pattern here in a minute, but I think we're at that point where we're just going to churn this thing. It is June. We're probably going to see this thing last for a while. And, as far as this choppiness, like I said earlier, we keep saying the S&P get rejected at 4230. Boom, it gets up there. I think it printed 18, back under 4200. Right now, the E-minis are trading right at 4,200. So there's just a grinding going on. But what's happening, and this is what I'm going to show you here in a minute, in the background is huge amount of traction coming on in the database on a short-term basis. Like I said, 3,800 buys. So let's get into the charts and take a look at how everything's kind of setting up here. We get to a daily chart here on the E-mini. And I've been talking about this a lot. I'm going to zoom in on this a bit. You see this narrowing pattern here. I actually kind of nicknamed this like the crocodile formation, but I have all these funny names for this, the dragon head, crocodile. But this, when we get this type of narrowing, it's very interesting. We saw a bit of an expansion yesterday, but this thing looks at a averaging of a 3-day range, and then it runs some Fibonacci numbers on them, and that's where the grid comes from. But what it's looking at is this narrowing pattern usually ends up to be somewhat vulnerable. What we have going for us right now is we look at, I'll slide up just so you can see the PPMs here. We're seeing PPM 1 accelerating is at 0.21, which is almost at trend level. PPM 2 is breaking through its first and second derivative. PPM 3 is kind of flat, which it should be. It's down there. And I talked about this. These moving averages in this configuration are going to be where the support is. Very similar. If we come back here, I'll put a cursor in here. We look back a little ways here, and we come into some of these other zones where we get this narrowing. What we need to start seeing is an upward slope in the narrow, and then we need to see a blow up of that. I see somebody, I'm sorry, Mike is Kathy. Yeah, we might actually get a chance today maybe to talk about Kathy's Casino, and that's, because that's what she's running. She's not really a fund manager. But anyway, but the pattern is setting up here tends to see some negativity come out. You'll see over here on the left-hand side, I've got a cursor over there. We kind of rolled over and we came into some downside volatility. We did it again here. We got narrow downside volatility. Now, what we've really been in, if you want to get going back to mid-April, around the 16th, we've been stuck in a sideways range. We call it 41 to 42.30. And this pattern just like keeps going on and on. So we spent a fair amount of time. If we go to a weekly chart here real quick, you'll see what I'm talking about. We'll just stick with the futures. The weekly chart's been sideways, but one of the things that has been a constant, and I talk about this, is we remain above the 4160 level. And 4160 is the 10-week moving average. You can see we stayed right above this thing the whole time. I talk about this a lot, is that currently the 10-week moving average is the demand line for the market. So anytime you get close to that number, you want to be buying. And we had a low of 41.90. I think that was the low for this week so far. We got a small week, so 41.90, 42.30. There's that magic number. This is on the futures. I'm going to go to the cash here in just a minute. But we're really not seeing any acceleration here, but what we're seeing is that maintenance. And you folks have heard this thing all the time where we get, this is what I call the trend maintenance mode, and I'll draw just one. I won't get hung up on this concept. So in case you haven't been here before, these indicators are, this is a quick draw in. What they do is they momentum precedes the market movement. So we got these three areas. These are three, each one of these PPMs tracks a different moving average. And the point of it is the angle of attack. I've talked about this a lot. Right now what we've got is we have this upward slope in these moving averages, and these are weekly values. So it takes a lot to influence that moving average. Obviously, there are 40 weeks in this average, and a couple weeks isn't going to cause this thing to decline a whole lot. But what we get here on these indicators, I got a lot of lines going here, but we get this, what I call trend maintenance mode. And that's where we are now. We're in the maintenance mode. We're well above 0.25, which is minimum trend. This one's 0.57. This one's 0.47 and 0.48. These are all very robust trend levels. Everything is sloped this way, and we're just going to continue to hover along this 10-period moving average right now with a 0.57 number on there. As far as the PPM goes, there's less than a 30% probability to decline below that level, which is 4160. So that is the important thing to remember. We look at the SPX, it's the same situation here. That number is 4166 on the SPX. And so that would be similar number if you were looking at SPY or something like that as far as those numbers go. But same maintenance mode, same everything, same trend, all that stuff. So let's go over and take a look at the monthly chart. And I've been talking about this type of formation on a monthly chart. This is going to be interesting. I don't see the big surge coming from this point in time as far as the next level. If we look at the market grid for the month of June, 4257 is R1, S1's 4150. So we're trading between S1, R1 right now. We did get above R1, which is 4257. The next level is 4317. And then with looking just at the RXT here, you would get all the way to 4430 if you printed up the RXT. Same thing though, we're just now going into the trends have reaccelerated on a monthly. So as crazy as this sounds, this thing is recycling and going back into a trend maintenance mode, and that is likely to continue. Got to take a second break here. One sec. So as we look at this monthly, what we're really going to see is most of the summer we're going to stay in this range. Now the fact that these numbers are so broad, they're all the way from 39.78 to 44.30. Typically S1, R2, R1, S2 would be your extremes. That would put us back down. S2 would put us back down around 4,100. R2 would put us up as high as 4,300. And based on the analysis I just did on the weekly, we're likely to have a bias at least toward that 4,257, maybe 4,300 as we go through the month of June. As I've been advertising for a while, this is the sell in May and go away. That didn't work out real well. I think the NASDAQ was up a couple percent. Not a big move, but enough. So what we're seeing here on a monthly chart is where it's going to stall, do a high level consolidation. I'll just mark this out here real quick. I'm just going to draw a couple things so you get a complete context of this, and then we'll move on down through the indexes. So yeah, so we're just going to end up getting locked into this pattern here, I believe. Probably at least this will be July, and we'll get a similar type pattern. The only thing that will change us is that we get up and trade up into an R2, R3, which would be 3117, 3176. If we'd stay below those levels, we're not, we get to those levels, that could slant the grid just slightly, but it's still going to be basically the same type of configuration going forward. So there's not going to be any big moves, I don't think, above, let's just call it an R2 on a monthly, probably the top end, 4317, and an S2, 4100. So there's a very wide range. And what's likely to happen, and this is key because I'm going to show you this next, is that we're going to see a continuing rotation of the database. And our database on a weekly basis has just remained very solid around 62% or so. And that's just been, 72%. And that's going to remain above 62 virtually no matter what happens over the next couple of months. And in fact, we may see a recycling of that database. And I'll talk more about that. I'll put that up on the screen here in just a minute. But this is likely going to be all we're going to get from these markets. I don't see a big summer surge, but I do see a bias to the upside, and at least for the next, through the month of June, probably looking out to July, unless there's something that changes a lot. One of the things I didn't talk a lot about in my opening rant was also the capital gains that is going on. And, I think part of it would appear that the administration, I don't know who that is. I'm not, I have, I'm not going to say that. Okay. But I do have some theories around this. You guys might be interested. I think what we're seeing here, I'll just say this, is this is the Obama administration 2.0, and all the people behind the scenes that are running this thing are have an agenda, and they're showing us the agenda, which is good. And that's why I went on the rant that I talked about. We need to figure out as investors where to flow with the money. I mean, that's what I've been saying for 35 years plus, is that our job is to figure out the cash flow. Where's the cash flowing? And if it's not just bonds and stocks, I wish it was that simple. There's a lot of people that think it is. It's really not. There, especially when we see the debt markets get as big as they have. There's definitely some other things going on there. That old relationship doesn't really map out as well as it used to. I mean, I dug into a guy that runs a small mutual fund, and he claims to be somewhat tactical. Well, 100% long bonds, which are trending down. Rates have been trending up over the last quarter and a half, and 0% stocks when the stocks are trending up. So, you get into this thing that I talk a lot about, attitudes and opinions. That sounds like this person the manager has an attitude or an opinion, because that not driven by market data, because there's no chance that you wouldn't own a stock right now, right? That would be crazy, especially all this year. I think the fund's down 0.61 on the year with a stock market that's up basically 10, 12. So that's not a good sign. Even if you're doing a simple 60-40 allocation, you're probably up 6-8. Okay. So anyway, but this patterns that we're going to see here are just going to be static. So let's move on and let's go to NASDAQ. I know I covered this in detail, but I just want to go through the high level for right now. I'm just taking a quick look at what you folks are chatting about real quick. Yeah, bonds have been coming back in, but not from 3 months ago. Anyway, yeah, we're going to go through all that. So, so NASDAQ, same story, right? The 10-month moving average is going to be our big demand line, 12,757. That's your extreme downside. Last month, we got down to 12,915. So sort of got to it, but if we look at the market grid, 12,915 was just below S3, not quite to an STX on a monthly basis. And then, of course, we saw the big rebound back into the pattern. And same thing here on a monthly basis, probably looking at S1, R2, so that'd be 13,308, 14,176. I usually don't bring up the cash composite, but I'm going to do that here. It's slightly different numbers. So S1 on the composite cash is 13,507. We've been down to 13,698, not quite there. 13,990 is R1. So my expectation would be here as well as S1, R2. If we did pivot, the 13,236 would be the big number. And you've got a PPM 1 up at a 1.52, which tells you, and it's not really in play here, but the 10-period moving average, 12,807, there's less than a 10% chance for it to decline below that level. I don't expect it to decline below that level. I'm just saying that's where the major support is, and it's going up at about 200 handles per month. So that'll be 13,000, and by the time we get to August, it'll be 13,200, which will start to look very, very close to, not too far below where we're trading right now. And as in the S&P, I am looking for this summer just to stay in this range. So this is why it's going to be really important for you to do some really good stock selection to make money. It's not going to be about the indices. You're not going to be driven by those type of things as we go forward. It's just not going to be happening that way. Okay, let's take a quick look at Russell. And I talked about this, and I'm going to stick with the monthly graphs, high-level view on this stuff. The monthly graph is really locked in. This is the same scenario. If you recall, going back a couple months ago, actually, I said the Russell had pretty much topped out. I didn't say it was going to roll over much, but we're going to get into this range here, and we're going to be stuck in this. And right now, we've traded just about to an R1, S1, 22.23, nowhere close, 22.70. But R1, S1 is the range. I do expect to see these markets stay reasonably positive and have an upward bias. So look for a S1, R2 on this. And the PPMs are off the map on the Russell, which tells you that regardless of what happens, we're going to remain and support levels are going to hold. And if we were to break down and let's go to weekly, let's go backward here. The support levels here are at 2237. This is the Russell cash that we're looking at. 2237 is major support right at the 21. It's up at a 0.42. There's only about a 40% probability or a 60% probability that we will remain above 2237. So we should continue along this line. PPM1 is starting to turn back up. It's crossed its first derivative, but we're in that trend maintenance mode. You can see where we spiked, where the momentum spiked, and then these indicators go sideways, and we're in that trend momentum phase right now, or maintenance mode. And so we're going to continue along these slopes here, and if they start to turn back up, PPM1 is starting to turn up. It's at 0.31 again. It was down a bit lower. It was down actually all the way down to 0.61 at one stage, and now it's turned back up pretty nicely. And that's going to tell us that we're likely to see this thing go much higher in this pattern. It's just going to hesitate. So back to the monthly real quick here. The monthly chart is just telling us we're going to stay in this range. And like I said, S1, maybe an R2 is probably the best we're going to see in June. We'll see how it unfolds. We'll be hanging out all month of June. It's early. So as we go through these live streams, make sure you get those go. Yeah. Yeah, so I read Edwards and McGee in 1979 and found out everything in it was wrong. So try to throw out anything that you might have gained from that. It's just the worst thing ever. And it's promoted in some of the technical communities as, I won't say any more than that. I'm not a fan of Edwards and McGee. If I were to read any book, I'd probably read Bob Prechter's Elliott Wave, Understand the Wave. There's a lot of theory out on Elliott Wave right now which does not fit what Ralph Elliott wrote. There's a lot of really strange patterns. People are claiming they've got the wave counts all wrong. If I had nothing else to do, I would probably spend a lot of time on trying to correct all the bullshit that's out there on Elliott Wave. There's just some very poor theory. It's not following any of the postulates or anything that Elliott wrote about. So read the original works. And that there is another book that, since we're talking about books, there's another book that I would say you could read, another Prechter book, and there might be some others because I haven't. You're talking to a guy that's only read like 3 market books in 40 years, so I'm not a big fan of that. But I'm just I would. There's a book of, I think it's Ralph Nelson Elliott, R.N. Elliott, original writings. And if that's very much worth reading and studying what Ralph Elliott was writing, and that's really good without all the bias and everything else. The whole wave tech thing, by the way, is a combination of using moving averages and Elliott Wave to confirm patterns, and I just don't talk about a lot of Elliott theory on the channel, or I use the models that we're running actually try to address, basically they try to find wave 3, because that's where the money's in wave 3 typically. Can be sometimes in 3 and 5 depending on the expansion, but we built the models around that idea. Yeah, so I became a student of the market and we did a lot of studies. I could go on for a very long time. And I agree with what David Ford just said, that true Elliott wave is very good, but there's not a lot of true Elliott wave out there. And even in TradingView, they've got a bunch of these templates that they've got set up. They're just wrong. But that's okay. So the reality is, I need to say something here. The reality is, I'll just come on screen here for a minute. Reality is, doing this kind of stuff and studying the markets, you need to do a lot of your own stuff and confirm these things. You can use models like what we built and things like that. They certainly can automate and take a lot of the guessing work out of the markets. And they're not 100%. That's why we have what we call ER ratio, effective ratios, and all that stuff. Yeah, money is made not through accuracy, but through the old Kenny Rogers song, know when to hold them, when to fold them, how well you hold your winners versus your losers, and you want to have positive ratios there. So I developed a thing called an effectiveness ratio, and I'll just give it to you because you can do it. If you keep a log of your trades, by the way, you can do this stuff. And there's a couple really good software pieces out there that will help you monitor your trades. You can comment on them, and you can build some of these ratios that I'm about to talk to you about. I think one of them is called TradeSync. I'm not getting paid to say that. I haven't had a chance to dig into it deeply, but it allows you to do a lot of these things, and also does some AI analysis on some of your trades, which is good. So here's the deal. What you want is, I developed the ER ratio. I'm going to tell you this, folks, because this is something you can use if you keep logs on all your trades and you start to really look at how many times you're right and wrong, your percent win. And then what you want to look at really closely is what your average win versus your average loss is. Okay? Get that number and you get a win-loss ratio, right? When you get that ratio, if you take that number, whatever it is, let's say it's you're right. This is the basic formula. I'm right 50% of the time. If I'm right 50% of the time, I have to make $2 for every $1 that I lose. Okay, and what that does is if I know that ratio, I have to be. If I'm 50% of the time right, I make $5 on that. Sorry, my camera, this is funny. I have one of these AI cameras, and it turns on and off when I do things with my hands. But if I make $5, I'll make $5 on the 5 trades that I lose, and on the winning trades, I'm going to make $2. So I make double. So in the end, I lose 5, I made 10, I end up $5 ahead. That's how it works. You have to do a number of trades, and it's not through accuracy. When you see people, I'm 88% right. This trading, I saw some videos the other day. This strategy is 88.8% right. Don't watch that video, okay? Some of the best trading models that we have are maybe 30 or 40% right. And that means they're wrong 7 times out of 10. You're thinking, wait a minute, what are you talking about here? So what happens, though, is those particular models are making $3 and $5 for every losing trade. So they're making $15 versus 7. Some of them are seen as high as ratios as 6 and 7 to 1. And now when you're 40% right, you're just killing it. Because the 6 trades that you lost $1. 6 trades you won, you made $6 or $7. It's just off the map. You make a lot. That's how you make money. It's not, accuracy is a speech that I've done a lot over the years. Accuracy is an illusion. Accuracy is bullshit, basically, because it doesn't matter how accurate it is. The smaller the increment of trade, the more accurate you could be. But in the end, all it takes is one of those trades to blow up, and you took away 5 or 6 of those trades. You need the ratio flipped over so that you're making a lot more than you're losing. Okay, I think I'm done with that. Yeah, and the other thing we preach a lot, and I tell you guys, please sign up for go to kendallreport.com and just give us your email address and name, and you can make a comment if you want there on that form. It's no big deal. We do not harass you, but I do have something I'm working on that I'm really excited, and I'm only going to put it out that way. I don't want it all over the internet. Okay, so sign up. We've got a number of names out there right now, so make sure you do that. Yeah, it's funny, David Ford. There was a guy named Lou Horowitz. He used to be the president of the New York Futures Exchange. He was an old friend of mine back in the 80s. And Lou used to have a line, "The trend is your friend." He would always go, "Bob, just remember, the trend is your friend. Never too high to buy and never too low to sell." That was his favorite line, so it's pretty funny. Yeah, and another colleague of mine came up. We had, I think, in our 2010 national conference, we did a. He goes, a lot of times if you're doing like pie chart investing, that it's like driving, looking out the rearview mirror. It works great until you hit a corner. So that goes to what Delota just said, until the bend in the end, and that's that scenario as well. But anyway, listen, I'm really excited. So make sure you do that. I just broke up a little bit of where we were in the broadcast, but these concepts are really important, and it's really important to track what you do. So before you go trolling anybody on the internet, make sure you know what kind of decisions you're making. And I just was reading. I have been writing a book for a couple years, and I was reading the open entry, and I'm going to share this with you because I've been looking at this lately. If you asked 1,000 traders, money managers, wannabe traders what they want more of, the two things they want more of, around 95% of the people are going to answer more profits, right? That makes sense. So what is the second answer that they have? And I argue all the time. I talk about it on the channel. We used to broadcast our WaveTech training sessions out there so people get a deeper understanding of some of the other concepts that I do. But what happened is, so the second thing has to do with having a process, having a way to track what you're doing, what I just talked about. These are important things to have, because what happens is, as you start to understand more about your decision process that you're making, good or bad, you start to learn how to fix it. But once you get the process down, the second thing, and I'm not going to go too deep, any more deeper, because I could, the second thing everybody wants is confidence. If you have confidence, you have a decent process that you've validated works, then you get to play for a long time. Maybe you get an old guy like me who's still got most of his hair. I'll be 69 in a few weeks, and has managed to survive in the markets for 41 years. So that's who you get to be if you get a good process. I always joke, if you can find out three places you should buy and have at least 2 exit strategies, that's all you need. It's not that complicated. It's really not. So anyway, I think I'm done with that rant. But that's really one of the primary things that you have to know as being involved in these markets, and understanding what your decision process really is. And if you find out you suck, that's okay too, because you need to know that, and you can't live in denial. We'll just I'll stop there, but there's plenty that we need to do in talking about that. But make sure this is just sign up for KendallReport.com. We don't hassle you, we don't do anything, and you can opt out if we did. So it's not a big deal. It's just a mailing list, and I do want to tell everybody about that. Like I said, I'm not going to put it all over the internet. So anyway, let's go back to analysis. Sorry for the long segue there. But just going back to the Russell here, this is going to stay sideways. We've got the 10-period moving average is vertical at 3.36. The PPM2 is up at 2.15, PPM3 up 1.19. These things are screaming. The moving average itself is going up about 65 handles per week. I'm sorry, per month. So that's going to be into this action. It's going to be into about where the S2, S1 levels, that's going to be a support. When we get there, we should finally start to see these markets move higher. And I suspect this is going to be coming into September or October, maybe. It just looks like we're going to spend, I advertised in the past that we're not going to get one of these. I've advertised that we're not going to get the doldrums, but I think now that as the market's starting to unfold, we come into June, I think the summer may be more of locked in a range type of summer, but there's going to be the opportunities possibly in the areas I talked about, whether it's in energy or financials is another area to look at very closely. And I mentioned that in last night's videos that we're seeing a lot of rotation into mid caps and the small caps. And there's a lot of mid cap stocks that are in the financial area. Financial sector is the biggest sector in the market. So there's a lot of things to harvest from there. So let's do one last thing, and I want to show you the charts. Get the right one. So this is the chart of the Russell versus NASDAQ. It's getting up into that resistance zone. It's starting to stall a little bit. I talked about this a while ago. I think with some of the rotation I'm seeing in database, we might be able to move this spread higher. Whether it's going to be able to do a whole nother leg up yet, it's hard to tell, but it does look like there's some rotation coming in. And the fact that we were able to get above this last high is telling us that we're going to at least come up into the next level of resistance on the spread, which tells us there's going to be net, there will probably be some bias toward the small caps, but there's still there's a very broad range that these things are going to be swapping back and forth, the leadership role, especially when you're looking at the contrast between the Russell and the NASDAQ. There's going to be a lot of rotation going on there. You know, a lot of the COVID trades that we saw, the work out of home trades are kind of going away, and people are rethinking. There's a whole recycling that's going on in the market, and that's the rotation that I'm talking about. All right. This is somewhat of an interesting. This caught my eye when I looked at it just now, just because it was up 50% on a day. It's the 13-week T-bill. So it's up 5 basis points up to 0.15. Not sure if that means anything. There's been people talking about some of the activity in the repo market, and that is. I used to be a big Fed watcher. I used to keep a log of all the Fed's open market operations. And a lot of it is derived from this, and it looks really big what's going on sometimes, but you have to understand how big the Treasury and the Fed's book of business is. It's gigantic, right? It's trillions of dollars. So to be able to control on day-to-day, there's going to be systematic issues going on within the banking system, money's being transferred. It doesn't necessarily mean there's something negative. I mentioned this, I think, in last week's live stream. You know, if you want to find out two things, I referred to zero hedge as doom porn, right? So if you want to find out all the worst things in the world that can happen, you can go there. But you can also go there to see exactly what's probably not going to happen. You could fade their most bearish calls. I'm not sure I've ever seen them be right, and I guess I've voiced that too hard when before they got kicked off Twitter. They blocked me because I was calling them out on a lot of this. But the point is that when we look at like a move even like this in interest, it's up 50% today. Looks really big. It's really has a lot to do with maybe some internal issues and things are going in the banking system. I am watching and just keeping an eye on that, but I don't see anything significant that's likely to cause any major disruptions at the moment. And so these are just rotations and things going on in the banking system. And the banks, the treasury book, the the balance sheet of the Fed, balance sheet of the government, these are really big numbers. And you can take that across the sovereign world, and then you can also go into the corporate world. These are the debt markets are gigantic. They're the biggest markets there are. Only thing bigger is currency because everything's priced in currency. So, but this is not an indication of anything. I don't believe. I'll continue to watch it. I watch these things all the time. So let's go over and take a look just at the. Let's take a look at, and we're on a monthly again, by the way, and that was a monthly chart we were looking at on the 13-week T-bills. But what we're looking at here is really the treasuries are starting to stall here. They have that similar, this is most likely, those of you who've been around the channel a little ways, know I talk about these dragon heads. This is most likely a dragon head, which will form, this is monthly, so it's going to take a number of months, and they usually resolve themselves to the upside. I still think that 40 period moving average is the big number to watch. I'm going to show you the 200-week moving average here in a second, but that 40-week moving average is 1.82. It's declining yet. It's actually PPM3 is down 1.72% per month. So that is still declining. That's going to be major resistance. If we got to that level now, the probabilities of going higher than 182, 180 is very unlikely. So my guess is we're going to stay looking at the market grid for the month. These are good ways, by the way, if you are a subscriber and you get the market grid, I think that I'm pretty sure the 10 years on there, and very soon you're probably going to be able to get that on the TradingView as well. But the R1 is 16.4 or 164. S1 is 151. That's probably going to be the range for this month. I don't think you're going to see much above 164, maybe prints 168, but 170 is definitely the ceiling on this thing. 171 is R2, and S1 is probably going to be the floor. I don't see us getting below that. S2 would be a 1.44. That would be pretty substantial move. Let's go to the weekly chart just so I can show you what I'm talking about there, and then you'll be able to see a little different picture. This is the 21-week moving average, 1.48. We'll call it 1.49. It's rising at 1.59% per week. So we're looking at about 2 basis points per week. So it's going to be 150. This goes right to what I just talked to you about, 151, 150. That's going to be the low end. So we're going to be locked 150, 170 on these yields. I don't see this thing getting much lower than that. And it's interesting that PPM1 is actually negative right now, but it's starting to turn up. So I'll be watching that. I'll talk about that over the next several weeks as we go through. And I get an opportunity to go through a lot of detail here on these live streams. So I can just go through market by market and talk as much as I can. And I do. So let's go to, let's take a really quick look over at the yield curves just for a second. And I think this is also important to understand, is that the 530 spread is one I pay a lot of attention to. I used to consult a lot of banks, their big trading rooms, and especially the guys that were running the proprietary rooms and running the bank portfolios as far as keeping the bank in position. I've told folks before, banks don't take risks. They're not in the risk business. They do have trading units, but on a relative basis, it's very small to what they do on a big scheme. They get a lot of leverage out of those trading units and can make a lot of money there. But when it comes to actually putting the bank at risk, they don't take much. For a bank to be incredibly bullish on bonds, they might have a internal maturity of maybe 7 years. Typically, they're between 3.5 and 5, and they manage those spreads very, very closely. And I talked about this a year ago when the Fed came in. The people were talking about inverted yield curves. They were talking about yields going to negative, all that stuff. You can go back and watch my videos from, March, April last year. And when I talk about this stuff, what I said, there's no way it's going to happen. The Fed wants this yield curve to steepen. They're not going to allow negative rates, and we haven't had negative rates. You could argue that there's negative rates relative to inflation. That's a different argument. But from a pure rate viewpoint, there's not negative rates. But you see the spread just exploded. I'm going to put a cursor on this thing here. This is February 21 to February 21st of last year. The next day, 28th, we already saw the steepening, but the big 3.6 was the place where the Fed came in and announced they're buying everything. Especially when it comes to bonds, we will support the bond market. We're going to support munis. It doesn't matter what it is. They just opened up the book and said, we're buying anything and everything. And that's when you see the next snapshot here on literally the following week, the yield curve had already started steepening, and it's been in that steepening trend for a while. I think what we're going to see now, I think they've got the levels where at 1.48%, the 5 versus the 30. And what that's really telling us is that sets for a pretty healthy tone in the banking system, especially on the 530s. Sometimes folks will look at, the 5, the 13-week versus the 5, or that's another measure. This measure here, I know from working with the banks for almost 8 years as a consultant to a lot of the major banks. I think there were 36 of them that got my service, and this is the sweet spot in their books of business. And I still have friends in there, and I know this continues to be the place where it's going. So I just look at the line. I will go through Ether and Bitcoin here in a few minutes. But so these spreads are important to understand. It also has a lot to do with the structure, and there's no stress showing up in these things. And I'm telling you, if there was something with the repos and things going on, that we'd see there'd be different things going on. So the Fed's quite comfortable with what's going on right now. They're really not in any kind of stress at all, or they really worried about things. And it's pretty much, from what I've been able to see, it's basically business as usual, and they're managing a very big book. I always wanted to work in the Fed funds room in the New York Fed for many years. When I was a young guy, I thought that would be just a great place to work on the Fed funds desk or any of the short-term desks where there was a lot of activity doing repos and all that kind of stuff. I wish I had that experience. I always wanted it. There were a couple of jobs that I wanted when I was young that I just never got. I did have some pretty cool institutional jobs, but that's there's a couple that got away. There's one that always comes to my mind. I won't share it with you, but anyway, let's move on. Next obvious place to go is we're going to go the dollar. From there, we'll go to gold. I know I cover it in detail all the time. There's a couple things I want to go on a long term I want to talk about, and then we'll hit the coins, we'll hit the cryptos, and then after that, I'm doing deep dive on. We're going to talk crude oil for a while, okay? And then, what time is it getting to be? Yeah, so by the time all that happens, another 15, 20 minutes, then we'll be able to move on and get into some of these stock ideas that I'd like to touch. All right. So this is the weekly Dow, and what we're seeing here on the weekly Dow is there's still a lot of downward pressure building here. The ppm1 is down at 0.31. That's this first indicator here, and accelerating. This is weekly. ppm2 is kind of an upslope. It's neutral. ppm3 is neutral as well, and it's in an upslope. So we're at this point where this is an if we see ppm1 turn back up, get out of trend mode, then there's a chance that we could set up a bottom here, and we'll never trigger. I talked about this 89.21. We have not triggered it. We get down to 89.65. We came really close to that trigger, and somehow we've managed to maintain the Dow at these levels. And this is weekly, so this 10-week moving average is, bring that on screen so you can see it, is 90.93. We're 89.90, about a buck higher. And this index, just remember, this Dow index that we're looking at is heavily weighted towards the euro. I want to say the euro represents like 25 or 27% of the index. So it's heavily weighted that way. But it represents, I think, appropriately some of the, I guess, it's kind of got all the pairs bundled in one. Might be better to look at individual pairs, but for the most part, this summarizes what's going on, I think, fairly well. But this is a critical level on a weekly. We go out to monthly. A couple things, I've talked about this. The 200-month moving average is at 90. I'm sorry. Get the right number. It's down here, 86.95. So if we did break below that 89.21, that'd be your next level. What's interesting going on here, we're in trend level on the ppm1, ppm2 also. That number is at 91.55. This is monthly. We're dropping about 20 cents per month. And so what this tells me, just looking at the ppms, ppm1 is actually cutting through its first and second derivative. There's potential bottoming pattern here, so I'll be watching this very closely. But 89.21 is key pivot number on the downside. Got through that, then you're looking at this 86 handle. Let me get the exact number here. 86.95, called 8,700. That would be a decent sized move here. And then we would set up maybe another major bottom. We got down to 88.25 back in 2018. So there's a number of support levels. You know, I always talk about clusters of numbers. There's plenty of those around the Dow right now on that level. Okay, next, gold. And I'm going to leave it on monthly here because I want to just look at gold monthly. I mentioned this on Monday night, Tuesday's video, is that we got an RXT sell signal on gold last month, in the month of May, which suggests we should stay between an R1 and an S2, so that's 1935 and 1855. What's interesting about 1935, it's very close to 0.618 retracement, which is at 1943. So somewhere around 1935, 1943, we should peak out. We've been up to 1919. We're trading 1910 right now. And so our monthly range, what I would look for is a downside min is 1884, reasonable probability for an 1855, and it's possible that we'll see this 1935 print. It looks like we could see that first, and maybe the second half of the month we'll start to set up this move down to S2. But this is, the basic expectation. I haven't went through that, and I think on a monthly basis very often. So anyway, that gives you a little perspective. I cover gold every night on the channel, so I'll leave that analysis for that. All right, let's go Bitcoin next. Let me get rid of this. Let's go to a daily. What's interesting is 200-day moving average is slicing right up through Bitcoin here. And as you folks know, depending on what exchange you're using, these numbers are a little bit different. So this TradeStation updates and closes at midnight every night. I was talking to a friend of mine who's pretty deep in the crypto space, and he was telling me that a lot of folks are now settling at the same time the stock market settles, so they have a settle price for ETFs and other strategies that are out there. So that's important to know. So so we're continuing to see this. What we're seeing though, check out the PPMs on Bitcoin just on a daily basis. It's PPM 1 is at a 0.41 now. So we're above the 10 period moving average, 37,024, last 38,035. We're going to have tons of resistance on that 21, which is dropping. This is daily, about $20 per week, not per day, and so that's going to come into play here probably in the next 3 to 5 sessions. So obviously it trades every day, so that'll get us all the way into around Monday. We should start to see a further bottoming pattern. I'll be looking for PPM 1 is still down 0.38, so that's what that 42,763 is. Big time resistance, and that's dropping, so it'll be 41.6 roughly. I think we'll be able to find this number on the market grid to watch for. Yeah, here we go. So 41.062 is going to be R2 weekly, and we also have the 40-day or 40-week moving average coming through right here, which is similar to the 200-day. So we're holding that number. PPM 3 is up at 2.01, and that is substantial, meaning that there is less than a 10% probability for it to trade under that level. You can see it's at 37,463. The low has been, 33,461. The low has been 34,210. So we've come almost to that right there, and we're bouncing. I would suspect to see this thing move back toward maybe that 41,062, maybe as high as 44 in this pattern. But we're going to set up a pattern between the 21-week moving average and the 40-week moving average. Round numbers 33,460 to 48,061. So we should be stuck in there. PPMs on a weekly basis are negative, so there's a lot of work to do. We'll see the 10 period moving average cross through the 21. That will actually signify more of a bounce back toward the 21. So that'll act as a magnet at that point in time. So we'll see that happen there. So let's go through Ether. Ether is just a crazy pattern because of the volatility that it saw. We did get a RXT sell. I talked about this on 5/7, and we spiked up, and then it just collapsed down. And what's interesting about Ether relative to Bitcoin is, I'm going to move this over so we can this is a weekly chart. Going to draw this through here. These three lines, this is the 10/21/40, what they're looking at a plus 4.32 ppm, a plus 3.71, and a 462. So those averages are going to be, that's going to be your demand. You see we get down to about the 21-week moving average. That's where it held. That's going to be your solid support. This Ether's going to want to stay above that demand line 1522. That's going to be the place where it's going to want to stay above. And you're going to be able to probably play a pivot off of there. If you had the daily market grid numbers, then you could get a little closer to that, I guess. Let's go over to so here's a little different look. This is the daily. This is on Market View. Let me add in the let's add the market grid in on Trading View. And this is on a daily basis. Hang on, I got 3 of them on. Okay, so this is on a daily basis, and what we're likely to see here, let's put the data window up. What we're likely to see here on a daily, you're going to be stuck under the 40. So this is not the right chart, is it? Hang on. It's kind of interesting. There, it actually looks like it froze up. I can't seem to find. Here we go. Yeah, I don't know. I never know what I'm looking at here, so I don't know the right symbol on this on Trading View because I wanted to show you something here, but so I'll go back to TradeStation here. Okay. Yeah, thanks, Dan. Eric, appreciate it. Yeah, I'm just looking at some of the markets as we're talking here, just see what's going on. NASDAQ's little pressure on it, not a lot, down 9 handles, just an update on the markets. E-minis 4201, just hanging around 4200, 4204 SPX. Russell's flat. Really kind of a nothing day. I didn't actually see anything happening, as I mentioned in last night's comments. So. One second, folks. Okay, so yeah, I don't see. I would say 21 is going to be the extreme on the downside on Ether, and then we'll see upside of most likely is S1, R2 is going to be the ranges that you're going to get into. Maybe R2 would be down. Yeah, that's going to be your ranges. We'll call it S1, R2, 2152 to 3002. Yeah, I wasn't saying anything for a minute. I was having a technical issue, so it's all good now. Okay. So let's go into crude oil. I think that's a topic worth touching on. Crude had basically a classic dragon head. We're starting to move higher out of the pattern. We're moving up toward on a weekly basis. We're moving up toward the R3 level is 69.61, so we're getting close to that. RXT 70.72. I want to see if there's any Fibonacci patterns out there that are projecting any higher prices here. Yeah. Okay. This is weekly. So there's 3 projections that are still live. I'll put that on the screen so you can see them here. 91.15, 104, and 112. There's a couple patterns that have emerged here. I will draw on the screen so we can unpack some of this stuff. So you'll see these numbers right here, and then there's some numbers here. These are an updated projection, and this bar right here generated this. There is a pattern recognition tool that I built that recognizes patterns and all that. And there's a pattern, probably this last one here, which is projecting prices up. And these are Fibonacci. This is that this pattern would be equal in length. This is 1.382 and 1.618 at the upper range. But the reason why I bring up both of these areas between these two here is that they're similar projections, and this happens a lot where on this Fibonacci tool where we'll see something negated and then it's still a valid pattern, because this was developed by somewhere like here when it took out, then it came from this projection. And I'm going to show you the numbers. When I'm on this drawing tool, it freezes my screen, so I can't see exactly what the numbers are, but I will look at them in a minute. But these are similar numbers, especially these upper red and yellow lines from the original pattern projection. Then we get an update again as the patterns unfold. So we're looking at, my guess is $88 to $90. And I said earlier, if we were to get a sustained, let's take a look at these numbers now. Yeah, 90, the high number, 87.40 to 95.97 was the original projection off that pattern I showed you. This pattern here now suggests 91.15 to 104. So I'm going to go with an 87.40 to 91.15 range as a potential on the upside here. That's a very big move from these levels, right? That's a substantial move. Now let's look at the PPMs. What are the trends telling us? A couple things again, just drawing a more evidence. I talk about this a lot. You heard it just a little while ago if you were watching then, as this momentum precedes price, and then they go into maintenance mode. These indicators, these are the PPM, stand for price, pressure, momentum. They're not about divergence. They're not about any of that stuff. They just recognize trends, trend levels, and probabilities. Okay, and so what happens here? We got above this 200-week moving average. I remember last November, December, I was talking about hitting that number. Well, we've managed to hit it and basically hover around it in this zone that we've seen so far, and remain above that number for some time, and that's 60.95. That's what that number is. So this pattern is projecting prices here. As I mentioned a little while ago, this line here at $80 is probably the inflation line. We might spike up, but if we start to hover above the $80 level, we're going to start to see more inflation, systemic inflation in the system. Now, our good friend Jay Powell has been telling us that inflation is transitory. Janet Yellen has been telling us that inflation is transitory. And it may be from their viewpoint, but they have been a little short-sighted, especially if the energy secretary, the president, who's ever making these decisions, continues to choke the oil patch down, taking leases away and shutting down wells, not getting things back online. We were 100% not that long ago, 100% energy. So I guess we didn't need any other energy. We were 100% sufficient on our own. And the point of this is that what we're seeing now is we're moving away from that to oil dependency or import dependency, and it's kind of on a teetering edge at the moment, but it's going more that way as it's obvious that they have an agenda. The government, the current administration have an agenda. They want everything to be electric powered or wind powered or whatever. They want it to be green. And even though most of the green technologies aren't very green, including, I won't go there, but they're not. And so I also made the point in my opening rant that this oil is a very big dependency. It's not going away at all, maybe ever. There's just certain things that need fossil fuels to run that can generate the engine, the engine power necessary to do certain types of functionality. So my point is that if we do get above 80 and this whole transitory inflation thing goes out the window, because now if we start to maintain crude oil, now there's things. Crude oil is in everything. I guess there's not going to be any more plastic either, right? No, there's still. We're looking at all of these energy products are all over the place, so they're not going away, and so this is going to cause more systemic inflation. I'm still on this that we will have long-term inflation. There's other areas out there that are happening. It's not just lumber, okay? Lumber's definitely got overdone. It's correcting a little bit, but the point, that's not even about lumber. It's not about those things. This is more systemic. Everything runs on oil. You can want it to run on electric. It doesn't. The amount of electric cars, what is it? A couple percent, maybe 3%, I think. There's just not a lot of it out there, and it's not material. And it's going to take a long time to make it material. So this is a big moves what's being done. It is going to cause more inflation, more systemic inflation that I think ultimately the Fed will have to recognize. And then that's when that consolidation I showed you a minute ago on the treasuries will start to look more like rates going much higher because of inflation, and then you'll start to see the inflation expectations forward-looking start to build into the markets. And this looks very obvious to me. And let's go over to a monthly chart just very quickly. And I'm not sure, I'm hoping that TradingView has longer term than this, but anyway, this is a similar pattern that I talked about. If we were, let me zoom in on this just so we can get a better view. So this pattern where my cursor is here, we're really getting locked into above the 40-month moving average, which right now is $60. That $60 number is a very big number. That's going to be your major support, 60. I'd be shocked to see even a 58 print. And we should see this stay sideways. We look at the market grid for this month. 71 is R2. We're not quite there yet. We're above R1 at 68.84. The high's been 69, so we're just above there. We're trading right at R1 right now. I would suspect we could see an R2, R3 this month, especially all this stuff goes on. I was just talking to you about this trend maintenance mode. Here we are again. Momentum surging here. Now we're going into maintenance mode on PPM1. PPM2 will follow, and this thing is likely to continue to trend potentially all the way up to this 200-month moving average. It is declining, but that's 108. That probably puts us into that 91, 95 level I was just talking about as far as all the patterns that are out there. And as the economies come back more online, as all the things that we see happening around us right now, that's going to continue to drive all of these markets higher as we get to normalization. I am going to bring up something here. Oh, you know, it's not on this account. I just realized something. So let me just go off screen for a minute. Let me pull something over. I need to log into a different account so I can show you something here. Okay. So we're going to dig in, talking about the oil. I'm going to take a look at the Buffett intermediate strategy. It's up 30% on the year. As I mentioned, we own all 9 of the airlines right now. We can go in and look and say, well, when did we buy those? And we can see right here, we bought these. Let me zoom in on this so you can see it a little better. So we bought these, most of them. Alaska Air has been on since August of last year. Most everything came in late in the year. United did come in on March 1st. That's the newest position out there right now. So we're seeing all of the airlines long. We're looking at, here's Boeing. Boeing's up 30%. Came into Boeing on 11/16, 9% of the portfolio, and last price bought at 194, 254. So all of these airlines are doing very well, but this also could be affected by this oil trade. And one of the things that I want to bring on up real quick is, well, there's going to be an oil trade. If we were to look at all the airlines and their stocks, we're starting to get back to where we were and a normalization. Matter of fact, let's just bring up like, let's bring up an American Airlines. We're starting to get up to the 40-period moving average. We still got a ways to go. We're almost back to where we were in 2020. Let's face it, the airlines are a crap business. They're just not good. You know, they had a pretty good run back in 2013 where they did really well, went sideways, and then they were already deep in a decline. These are terrible business models. They have expensive, you know, the fuel can affect them, which we just talked a lot about. It looks like their fuel cost is going to go up. You know, what's going to happen here, you know, is going to be interesting. We got, you know, American Airlines up almost 5% today, so that's great. And since we own it, it's even better. Looks like we're going to get an RTX sell signal out of this. The reason for this is ultimately these stocks are probably going to be affected by the fuel cost once, and that magic number is at $80. That's going to trigger everything to start to really start to go. And you know, who knows, you might be paying $4.50, maybe $5 at the pump. So yeah, so anyway, that's where we're heading, but we're seeing a lot of acceleration. I think the weekly charts here, I'd kind of get into a mini review of American here, but we're trading right up at in the week. But I want you to look at the projections. I was just talking about going to 200-week moving average. We look at this, and based on this analysis, we're looking at a price projection of 30, 31, 35 on this thing. So maybe the fuel costs don't come into play because there's so much activity coming on, and they're already starting to raise their prices, right? So they'll raise their prices as long as they can. So maybe they'll be able to initially absorb that until travel gets 100% back to normal. And it looks like that's coming really quick. So, you know, it just goes back to all the trolls that trolled me when I did the video way back last May when Warren Buffett sold. Take advantage of Warren Buffett's mistake. It amazes me that was just like one of the worst trades. He's made plenty of those, by the way. Trump for pump. That's pretty funny. Yeah. A Freudian mistake there. Yeah, I would, Floyd's Garage, I would agree with what you just said here. Thanks, Steve. What would we do without you on this channel and on WaveTech? I appreciate your effort. Yeah, so this I only ended up here because of all the talk of energy and what have you. But it looks like if these projections, at least the 200-week moving average, which is at 3071, 31 target on the Fibonacci, are right there together. So this is probably where we're heading on this stock. So that's pretty decent. That's another, 20%? A good number, right? Yeah, so here's OIH up 754, 240. Yeah, we also have objectives of 309 on this index. So that's a crazy number. PPMs are all turning up, very positive. Nice look here. So let's see what time it is. It's 22. Tell you what, let's focus on what I said. I think I've gotten everything I wanted to cover from just the general market stuff. So let's get ready and start to look at some of these energy stocks. So don't go crazy yet. Give me a second. Let me get a pen so and I'll grab a bunch of these. So here's the theme for today on the stocks. We want to have energy. We want to have anything to do with metals, batteries, new technology, all that stuff. Yeah, let's go for real estate. I like that as well. So if you have some REITs you want me to look at, go ahead, Zach. Just put them up there. Yeah, if we can, actually I can get them. I'll bring up another database. All right, you guys are getting going now. All right, I got quite a few. I've got a pretty good list here. There's a couple of these things I'm going to bring up. I subscribe to a thing called ETFDB, which is the ETF database, and it'll give you all the constituents. So some of these ETFs that you guys are suggesting, we'll look at the ETF. Maybe we'll take a couple of those. We talk a lot about using our platform, taking and hacking ETFs. Like if you just take Kathy's casino, we'll call it Kathy's ARK Casino, and you take out all the crud that she puts in her funds and just take like the top 10 holdings and run a portfolio on there, there's a lot of money in those things. You can beat her easily. It's just, she has so much crud in there. She triple downs and double down, triple down on really bad stocks. Yeah, anyway. But we'll take a look at a couple things. I am going to bring something up on the other screen just real quick. Okay, I'm going to take one of these ETFs here, somebody's suggestion. I just want to see what's in this thing. Show mainstream partners. Not sure I'm getting the right place. You know what? I'm just going to go through some stocks until I'll come back to this in a minute. Yeah, so can't really read this, but anyway, his SLH looks like a pretty good uptrend. PPM's all in a real good position from that standpoint. We're looking. Looking for probably a move up toward this 200-day. I think everything in this energy sector is going to look like that. SM Energy, wow, this thing's flying. We got a dragon head and then a blow up, and this is weekly, and this is probably going to get a weekly RXT sell. What that doesn't mean, RXT sell does not mean it's a top. It just typically will set up a sideways range up here around 20 plus. You're probably going to, when the market grid updates this week, you're going to see a substantial angle change in the going from flat to going up. And what we're looking at here is that PPMs are just really just screaming 3.57, 5.09, and 5.82. So that's big. That's very big. Okay. All right, I'm going to do ARKK just because this is weekly Kathy's Casino. We still have a lot of resistance right overhead here where we're at right now. The key pivot number is 132. I know that's not anywhere near where we are right now. If we were to trade above that, that would be a major deal, but I don't think we can get much above probably the 40-day moving average right now. We're looking at 116.94. This is 40-week moving average. PPM 1's attempting to turn around, but it's still negative. It's in trend mode down. So that resistance point is at 115.58. Don't see us. There's only about a 40% probability to get above that number. And we're going to see this thing probably stay in a sideways range. Now, I did notice on our models that we got a buy signal on the K, but I don't have high. Let's go over there real quick. Let's just put it in. Let's go to symbols. Let's put in ARKK. Yeah, so here's a symbol on this. Actually, I want the 3-2. Hang on one second here. So this was bought back in, there's been a couple of trades last year. It was bought, yeah, you can see bought it in 5/4/2020, sold it on 9/3, bought it back at 103 on November 19th, and we sold at 151, I believe was the actual sell on this, was 151. So we did buy it back in over here. So there is a current buy on this thing. I think the buy here was on 5/26 at 109. So that's where that buy is coming in right now. So the short term is long. If we go over and optimize this on a weekly, we're not going to have anything. In fact, we'll see it was long back in April of last year. It got out, kind of sold the whole little bit on this one. We should actually have this on 1-2, not on this one. Yeah, so the intermediate trends are really, it's sold out over here on this breakdown. And then we're currently looking at a lot of work to do, although the PPMs are starting to turn up. So there's some promise there, but I don't see it making a new high. The 15 minutes of fame have been earned, and it's time to move on. Yeah, so profit tree, how do you learn more? The best way to do that is make sure we have your email. Go to Kendall Report and sign up your email. I like that comment, David. Okay, so let's keep moving through some more stocks. This is ChargePoint Holdings. And this is daily. Let's go to weekly. This thing's had quite the ride. There are some objectives right now looking for 32 to 36 on the upside. You do have a 21-week moving average there. It's going to represent quite a bit of resistance. There's not a lot of stuff to go to. Somebody asked, let me just do something. Hang on one second. So this is where you want to go, and you want to sign up your email, and then you'll see it in the chat line. That's for WaveTech. One last one. The WaveTech one was wrong. That's the correction. There's one for the Pro version. I give you all the information you need there. So let's move on. Let's go. What time is it getting to be? 35 past. Yeah, so here's micro sectors, U.S. big oil, 3X. That you lost a lot of money on that one, right? Wrong time. I mean, it's starting to turn up. It's hard to do analysis just on a leveraged ETF like this. There are some objectives here that I can mention: 266, 328 on the upside. So there's some potential here. PPMs are turning up, just not a lot there to be able to make analysis of. Yeah, that major recall in Tesla, that's not going to help Kathy's casino much. Be very careful with ARK funds, they're very dangerous. They're highly volatile, and you've seen when the bubble pops, they get right in the way. Yeah, so somebody said Elliott Wave, Tesla go to 480. Right now, the Fibonacci projections for 419 is one of the numbers. What is this, weekly? Nothing on daily. We are about to get an STX buy signal, which means we'll probably stabilize for the next couple of days. PPMs are actually not in bad shape. Let me go to weekly here on Tesla. Yeah, there's not a lot holding. There's enough on the PPM3 to keep this thing hovering around this 40 period moving average, currently 613. I talked about this, I think, last week when we were trading well below. We were trading down at like 580, and I said we're going to run back to around 600, around this 40 period moving average 610. We did get above that. We got up to 635, and now this week we managed to get to 633 and now 599 low with a 603 last print. So we should continue to hang around this 40 period moving average for a little bit. It's not going away just yet. And if we do get under 539, then these upward projections go away. These downward projections, like I said, we'll call it 420 on the downside would be a minimum target. And if you look at going back to the 200 week moving average, then you're looking at a 193, which sounds pretty crazy, but they just raised their prices. They did. There's a lot of stuff going on as far as Tesla goes. So it's gonna remain interesting, but this market is about to enter a full out downtrend. So there's not a lot of good here to talk about Tesla. And it goes back. It was interesting. We got an RTX sell on January 8th. The RTX was 775, and we closed at 880, and we went sideways for a couple of weeks, but then we just started to drift. That was actually I think it printed a higher high right here. Yeah, it printed up to 900. But then you got the outside reversal, and the rest is history, as they say. So look for, I would say, 480s minimum, probably 420 on this thing. Yeah, I think if you were a Bitcoin guy, you'd hate Elon too. He's made a lot of mistakes. That SNL thing was embarrassing. I mean, first of all, SNL isn't funny, and then you get a guy who's very awkward, got Asperger's on there. A brilliant guy, but I'm becoming not as big a fan as I used to be of Elon. All right. Yeah, just grab some random symbols here. Not even sure. Okay, here we are. iShares China large cap. Interesting. Okay, thank you for whoever put that up there. This would be an interesting one to see if we could hack, actually. I'm going to move this off screen over on the other side here. I just want to see if I can get something off of that. See if there's any individual symbols that are in there that we could take a look at. Yeah, so I'll bring this up on screen real quick. Let's dig in a little bit on this. So we're looking at, yeah, unfortunately, there's no symbols here that I'm aware of. This is all the constituents in that large China. So LBAB, we can get, this would be worth looking at to see if there's a play here on some of this stuff. What are they charging on this thing? Expense ratio 0.74. These are really expensive. This is same as Kathy's Casinos at basically 0.75. I've seen some crazy stuff. There's a mutual fund, a small mutual fund I ran into the other day. I think I mentioned it on the opening rant. They're 100% in bonds and don't own a stock this year, as best I can tell. And they're charging 2% internal fees on the mutual fund. Of course, they only have 125 million, so it's micro fund at best. So yeah, okay, so nothing there. I was hoping to find something there that we could look at and maybe unpack a little bit. Alibaba's the only thing in there. Yeah, so Dow Jones, let's take a snapshot of the markets real quick. Dow Jones is down $2. Composites basically flat, down a little bit. Russell's down 0.1. SPX is 4203, up 0.3. I mean, this is just a nothing day. I think ADP came out as expected around 740 or something like that. So no surprises, no big surprises there. So we'll be looking at the continuing claims. That's not even important in the claims tomorrow. A couple other metrics coming out, but there's not a lot here until Friday, right? It's all about Friday, all about the unemployment. So let's take a look and yeah, so just looking at this China fund, PPM1 is turned up. There are some higher, now they're all been negated. So yeah, there's really nothing here. A lot of resistance around 4,400. So this is one that I'm going to put down on a watch list here. Like I said, some of these, I don't know these symbols, so I'm just bringing them up somewhat random. This is Safehold Inc. Kind of in a flat range. PPMs are all flat and trendless, just kind of hovering in between the moving averages. This is pretty obvious correction range. Nothing really here on a weekly basis. Till we see more action, maybe if you were to at least get above 73, you might start to see some acceleration. PPM1 doesn't look bad, but there's still, it's more or less in a bottoming phase. We're really not seeing a lot go there. Wrote that one down wrong, I guess. Here's energy transfer. Okay, this is an interesting one. Thanks for whoever gave that out. PPMs look pretty positive. This is weekly. We're definitely trending toward this 200-day 1260. Yeah, the PPMs are in trend maintenance mode, actually accelerating on PPM 3. So this is pretty solid. We should see this thing continue to move at least up to that 1260 level. There might be something bigger. Let's take a look at a monthly. It looks like there's plenty of data on this one. Yeah, this is interesting. So you can see this. I don't know any history about this company, but obviously cratered out in 2016, and we retested those lows in we retested lows in 2020. And now we're looking at it setting up a pretty good bottom. There's some Fibonacci objectives here for a 1137 to 1532. It's funny. I think I've watched the Big Short a couple times over the last several days, just kind of going through it. I haven't watched it for a while. It's always a good movie to watch if you haven't seen it. Yeah, so we had Alibaba. Let's go ahead and take a look at it. This is monthly. Pretty negative. Let me go to weekly. 200-week moving average is in play at 198, 219. PPM1 turning up, PPM2's positive, maybe 235. About all you got in this thing. A lot of work to be done. This trendless, completely trendless. Nothing really there. We'll do Amazon. Let me get rid of these projection tools here. Okay, so we look at Amazon. What we're going to see here is really a nothing. There's no trends to speak of. PPM1 is up, which is weird. The formation, we're really trading within the in the weekly grid here. The range so far is 3208, 3250, not quite to an S1, right to an R1. So there's not a lot of trend. There's just nothing here. And this is another one of those markets. And this is probably, we go through some of these things, this is probably what it looks like when we're going to maybe, see the NASDAQ just kind of underperform here as we come into this range. And, that's about it. I just happened to glance at the markets, folks. We did a complete about face in the market. NASDAQ is now up 18 handles. E-mini's up 425. Let's go over and take a look at these things real quick. Yeah, look at the run on the futures right now. 4204. So anybody, you guys are my ears. Anything come out just now? What's jacking this market? As we go back over to this other screen here, see NASDAQ's up 20 handles now. Russell's lagging. E-mini's up to 550 right now. Yeah, here's a 5-minute E-mini chart on here. And this, we're about to get, well, we'll see. We're about to get an RTX sell signal here. And since we got just, let's go to a 1 minute. I just want to see this thing. Yeah, it's interesting. I was going to show you, I was hoping to see this, but whatever that was is gone already. So we got up to, once again, we printed up to 04. Now we're back to 01, and they're selling them off. We're back at 4,200. So I don't know what that was. It doesn't look like anybody else can find anything either. So Yeah, so crazy movement there. I'm not sure what that was, but it's kind of interesting. Even this RXT sell here on a 1 minute graph, we got that close above it. Now here we are back in the pattern. So, and we got this big volatility expansion here, which usually tells us there's nothing to go on. Let's do a couple things as we come in to close. We got a few minutes. This is daily random lumber. I think this thing is just completing some kind of wave 4 here. It's about to move up. PPMs are negative, but starting to come up through their first and second derivatives. So this is somewhat encouraging from that standpoint. Let me fix these bars real quick. It's just easier to see if I do this. Yeah, so we've got a big reversal day going on in lumber right now, so that's somewhat interesting. Let's go back to the close here. We've got about 5 minutes to go. Now we're back at 42.03, so we're getting a pretty big volatility range set up here. This is a 1 minute graph that we're looking at on the S&P, so we'll see how this thing sets up. If we start to get the grid start to turn up again, maybe we can take out this high of that, which is 42.0475. Then you might see some short covering. But that was an impressive, I'm putting the NASDAQ futures up there. That was an impressive range, but they have the same configuration. You can see this is something that I do want to discuss with you while we're coming into this situation here, is that the pattern, this 10 period moving average, this is a 1 minute graph on the NASDAQ futures. These concepts work regardless of what the charts are. The stuff that I talked to you about on the channel, all this stuff works amazing. You can see that 10 minute line has been the demand line. We're hanging around there right now. PPM 1 is not really turned up a lot, but PPM 2 and 3 are turning up. Looks like we're going to try to surge this thing and maybe try this 04. This is NASDAQ, so to try that high at 13,670 that just printed. So we'll have to see how this. We'll go back and look at that in a minute. We've got about 4 minutes to go here. So the S&P is a little further ahead. We did crash below that, but that 10 period moving average is definitely the demand. And I know a lot of folks like to use, weighted averages, and that simple averages are just fine. You just have to understand, I've told you this before, is that you just have to be willing to take the time to understand whatever moving average. I don't care if they're weighted, it doesn't matter. These are here for a reason, because they were developed around to find certain patterns and stopping points in the patterns, and they had everything to do with the Elliott wave patterns. We just found they worked a lot better than any kind of weighted average or anything that we looked at. And this was back in 1983, 84 when we were doing this work. So a long, long time ago. And we just couldn't find anything that was told us that that's not what we should have used for the purpose we were using it for, which was wave analysis and pattern recognition. Yeah, so Danny, what the reason why someone does that, I used to be on the floor as a market maker. They probably have a giant position on. They don't want to sell the stock. So they'll just lay out some puts and put a little hedge on part of their position. That sounds like a lot, but if it's, yeah, it might not be, depending on who the player is. Yeah, so Pedro, let me try to answer that. It's a really good question. Pedro's asking, Bob, do you just confirm that your analysis that you expect the summer to be all about rotations, SPY low around 400? Yeah, yeah, I don't know the SPY numbers, but 401, yeah, 4100 on the S&P, so that'd be 410, right? Yeah, so here it is. It took out that high. If we look at this, it's ripping again uh, through the upside. So this is what this pattern told us it should do. And that's what I was talking about. PPMs are all accelerating here now. You can watch this real time. Let me get off the screen as we come into the final minute and a half. Yeah, so we printed up to '06 even on the print on the S&P. So up 650. I took out the quotes. Let me go back so I can see that. NASDAQ back up 20 handles. Russell's trying to rotate into the mix on a percent gain right now. RTY, which is Russell Futures, up 0.14. NASDAQ up 0.16, so they're pretty much even. Yeah, I think this is the final minute of trade. There, we just went through RTX. They're bidding on the close. They're bidding the S&P. That's probably encouraging. That was it, folks. So this is encouraging, I think. So yeah, just looking at this pattern, I want to watch the next minute or so, just see what kind of unwinds we get. We printed 0750 on the high. We're trading 05 even, so a little bit of backfilling here. Yeah, I'll take just a final couple little things here. This is plug. We wanted to talk about batteries. Here they are. Not a really good sign. Yeah, I'm just looking at this real quick. This is the daily. Let's go over to weekly. I don't think we're going to see much here. Yeah. Sandwich, between 10-21 period moving average. Let me bring that on screen so you can see this stuff. A couple things here. R1 3203, high 3150. This is weekly. 29 37 S1, low 29.82 so far for the week. We'd have to get back above this 40, and I think there's a good chance we can do that. It's actually got a positive slope to it, and PPM1 is turning up. So we're trying to set a bottom right here and maybe move back toward the $40, $41 level on plug. From a long-term standpoint, it doesn't, there's a lot of work to do intermediate to really set up a new trend on this one. Well, folks, I want to thank everybody for coming. I really appreciate it. We covered a lot of stuff today. I'm glad that, I feel like we covered a lot of ground. Like I said, some pretty good ideas came out of the stock section as far as, what stocks maybe to look at. And I'm trying to work on a couple things to be able to summarize some of the things that we do on the live streams and all that stuff. So I guess this will complete the show for today. Appreciate everybody coming. And what we'll do is have a video tonight. So there'll be somewhat of an abbreviated view of the world depending on what happens between now and about the next 5 hours. It's probably when I'll start the video. And we'll see what happens with our database. I would say I'm fairly impressed with the show. Somebody asked about the S&P. I did cover the S&P and all the indices on the replay. You can see that, and we mock up and put them on the timeline so you can see what I was talking about during those times. So anyway, I guess that'll be the end, folks. Thanks so much for coming. Really appreciate it. And remember, go to this page right here and sign up for the KendallReport.com. This is all we get. Your name, email. Like to know what platform you're trading on if you want to share, and any comments you want to put out there. And just hit sign up and you're done. And we've got some announcements that are coming out pretty soon, actually. All right, folks. Thanks again. We'll talk to you next week at this time, and we'll see you tonight on the videos. Have a great afternoon, what's left. Thank you.